I'm John Hanna for CityTV.net, and we are here at the Public House restaurant in Midtown Manhattan with Matthew Tuttle, the CEO of Tuttle Wealth Management. Thanks for joining us.
Thanks for having me, John.
Now, Matthew, with all of the terrible news that's happening in Japan and the other turmoil that's happening in the Middle East right now, let's start about what is your take with the current market? Is it time to get out or hold on to what you have, or what is your take within your company? What do you tell your clients?
Yeah, I mean, right now we're getting to a real inflection point where the next couple of days are going to be critical. We've done some real technical damage to this market. I'm not yet willing to say that this isn't anything more than just a correction that's going to reverse and the uptrend will start going. We are seeing some pretty strong sell signals, and we're definitely watching real closely. The real problem is a lot of this is being moved by radiation levels minute to minute, day to day in Japan. And that's kind of clouding a lot of the analysis and making it a lot harder to determine whether this is a real change in market dynamics or just a correction that'll reverse itself.
Now, in your office, do you get like a lot of calls and saying, Matthew, I got to get out of this market?
Well, we don't know, because what we do and what our clients understand is we're tactical in nature. So they know that we're going to get out anyway before bad turns into really bad. If we were typical buy and hold modern portfolio theory investors, then yeah, my phones would probably be ringing off the hook, especially with what people went through in 2008. But everybody knows we're watching it and knows that when we need to get out, we're not shy about getting out and sitting in cash for as long as we need to.
Now, with regards to, tell us a little bit about your company again.
Well, we've got about 15 people that work with us all across the country. We have an investment policy committee that I'm the chief investment officer of. We also have my two rocket scientists, Dean Kasparian and Murray Ruggiero, who are kind of among the who's who in tactical asset allocation around the country. We manage a little south of $100 million for clients all over the country.
And what is your return last year?
Well, we have a number of different strategies. So our returns last year ranged anywhere from about 3% to 15%.
And what was the winners last year?
The winners last year were our kind of longer term trend following portfolios that were pretty much invested for most of the year. Our best investment last year were probably real estate investment trusts.
Okay, so and what about this year? What are you guys looking at for this year?
Well, we were having a great time up until this week. Right now we're looking at some areas in commodities, especially agriculture, and we're also just really looking with interest to see how this all plays out, what kind of dislocations happen in this market. We're also looking at some lower risk plays like preferred shares and dividend paying stocks and things like that, where if we are in a mediocre market, at least we can earn some income along the way.
Now, what is your position right now? What do you have? You have like 50% cash? What are you?
Well, every strategy is different. So we've got anywhere from 100% cash to 100% invested in everything across the board. We look in our strategies at a number of different markets, a number of different time frames, and a number of different analyses. So at any point in time, we're all mixed up across the board, which is how I want it to be.
For a future portfolio manager or an investor who's trying to start up their own portfolio, how do you pick your stocks?
Well, for someone who's trying to do that themselves, they need to figure out what their edge is. How do they differentiate themselves from the mass of people out there who are already doing it? So for everybody, that's different. Our edge is what we're able to do in tactical asset allocation, trend following, counter trend following. That's what we focus on. Somebody else, they're not going to have access to the computer programs we have. They're not going to have access to, you know, my rocket scientists, Murray and Dean. So they may want to do something differently. But whatever it is, you've got to have an edge, and you've got to figure out what makes you different, what makes you better, and concentrate on that.
With regards to specific stocks or equities out there or commodities, do you look at the trend or the management of the company or their PE? I mean, what kind of technical stuff do you look at?
When we're looking at individual stocks, and how we invest is most of what we do is index mutual funds and index ETFs. But when we look at individual stocks, what we're looking at is really much simpler than that. We're looking to see what the major hedge funds that tend to be buy and hold investors, what they're buying. And a lot of times we're mimicking that and overlaying it with our tactical strategies to get us out when the time to get out is right.
Now, let's talk about your book here. How Harvard and Yale beat the market.
Yeah.
There's been a lot of talks about this huge fund that this Ivy League school has that they manage. Now, tell us about that in your book.
Well, the reason we wrote the book was really because I read David Swenson's book, and David Swenson's the guy who runs the Yale Endowment. And I was real excited to get his book because he'd beaten the market year after year after year. And I got his book, and it was basically said, you can't do what I do, so buy index funds. So that kind of made me mad. So I decided, you know what, I got to write the counter book to that, because yeah, I can't buy timberland, and I can't access the same hedge fund managers you access, at least not at the same price. But just using, you know, certain mutual funds and certain investments, I can construct an endowment type of portfolio with as little as, you know, a couple $100 to invest.
Now let's talk a little bit more about what you have in the book, which is the different investment vehicles. Tell us about that.
Yeah, so the book talks about, really what it goes into is that there are two types of money managers. Style box based, which are money managers who just follow an index or try to follow an index, and skill based, money managers who are much more focused on avoiding losing money. And the key to building an endowment type of portfolio is focus on the money managers who are skill-based, who focus on avoiding losing money. Because the style box money managers add little, if any, value, because they typically don't beat their index and you pay a lot for them. So that's one of the investment vehicles. The other one I talk about is the benefit of adding managed futures in a portfolio, because those are investments that are completely and totally uncorrelated with the markets. So you had a lot of managed futures funds in 2008 when the market was down over 30%, up 100%. So it certainly can't hurt to have that type of investment in your portfolio as well.
Okay, now let's define another part of your book we're talking about is the various asset classes. Tell me about those things.
Yeah, so in the book we talk about commodities, first off, where I recommend managed futures for commodity exposure. We talk about U.S. stocks and international stocks, where I recommend skill-based managers. We talk about real estate and real estate investment trusts, and we talk about private equity, which, you know, is something that I had to put in there because it was a book on endowment investing, but for the average investor, it's something they don't want to go anywhere near. You know, in private equity, the best managers are always the best managers, and they don't want you unless you have a lot of money to invest.
The book has been out when?
The book came out in right about at the low of the market, of course, in April of 2009. Perfect timing.
So the book is also available online at Amazon.com?
Yeah, the book is on Amazon, along with my first book, which is Financial Secrets of My Wealthy Grandparents. That came out in 2006, I believe.
Now, what is your website?
It is tuttlewealth.com, Tuttle wealth.com.
That's Matthew Tuttle, the CEO of Tuttle Wealth Management, joining us here at Public House, a restaurant in Midtown Manhattan. And I'm John Hanna for CDTV.net in New York.